Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 20th of July, 2024. We're publishing our gold and silver weekly update for the week ending the 19th of July. Gold and silver were rising nicely. Then on Wednesday for silver, and late on Thursday through Friday for gold, their prices tumbled. Why did this happen? Well, let's take a look. First, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Well, gold fell $11 last week, falling from 2,412 to 2,401, having hit a high of 2,484 and a low of 2,394, a fall of 0.5%. Gold spread between high and low was $90. Now last week, we said gold would trade between 2,375 and 2,475, and that it could at some stage try and reach 2,500. Well, it operated within our margin and closed within our margin and only fell short by $16 of our absolute top outlier range. In sterling terms, it finished the week up £1 at £1,861, and in euros it closed at €2,210, down €5. Silver fell $1.58, falling from $30.80 to $29.22, having hit a high of $31.46 and a low of $28.90, a fall of 5.1%, much more significant than gold. The difference between its high and low was $2.56, almost double that of the previous week. Now, last weekend, we predicted silver would trade between $30.40 and $32.50, with an outlier range of $30 and $33.20. It closed 78 cents below the bottom of our outlier range. While silver was in positive territory for half the week, late Wednesday onwards it struggled, showing very nearly a straight line descent. So, disappointing figures for silver. We envisaged they could have gone lower by a certain percentage, but it even beat our most pessimistic forecast. In sterling terms, it closed down £1.11 at £22.67, and in euros it closed down €1.44 at 26.91 euros. As a result of this, the gold to silver ratio rose almost 4 points, from 78.3 to 1 to 82.2 to 1. Bitcoin, however, currently stands at $66,586, up $6,500, and the Trump effect has certainly boosted cryptos. Equities were broadly lower, save the Dow Jones. The Dow was actually up 287 points at 40,287, the S&P 500 down 112 at 5,505, and the Nasdaq Composite down 672 at 17,726. Poor old FTSE this time down 97 at 8,155, though it has had a good run recently. Oils were lower. Brent crude down $2.40 at $82.63, and WTI crude down $2.08 at $80.13. The dollar index stands at 104.39, that's up 0.3 on the week. Now last week, Tuesday's retail sales, which were our focus, came in at 0% for June, compared with 0.3% in May, showing sales growth is petering out, though the retail sales minus automobiles was in fact higher at 0.4% compared with 0.1% the previous month. So slightly contradictory news there. Initial jobless claims came in 20,000 higher than the previous week, again suggesting perhaps the economy is slowing. But the massive rise in the Philadelphia Fed's manufacturing survey for July showed a jump from 1.3 to 13.9. However, what affected markets most was clearly dovish rhetoric by Fed Chair Jerome Powell on interest rates, mainly supported by most of the governors who also spoke at length last week, suggesting that rates will fall, or could fall, before the 2% inflation target is reached. However, the issue became, and we shall discuss in a moment, that the market had by Thursday for sure fully priced in a September interest rate cut with a positive ratio of 98%. So there was nowhere else to go but to sell on the news after buying on the rumour. We did expect this to happen, but next week, not the tail end of this week. So this coming week we have flash PMIs on Tuesday, new home sales on Wednesday, Q2 GDP figures on Thursday, and the nail-biter PCE or inflation figures on Friday. If they are not really good, precious metals and equities could indeed take a bashing, if, of course, they don't fall before the figures are announced. Now, the market is expecting 0.1% PCE rate for June, reducing the year-over-year rate from 2.6 to 2.5, and the core PCE to do exactly the same. We shall have to wait and see. So what is the envisaged momentum for gold? The answer is short-term, downwards, until we know what the PCE figures are, and they had better be good. Looking at the gold chart last week, it closed just $7 off its week's low. Profit-taking had taken hold, and frankly, we too were tempted to sell some gold to buy back perhaps in the late summer, as we saw $2,500 being its short-term high, and now it could quite easily fall back to 2,300, though some pessimistic pundits are predicting 2,002. Technical analysts, though, are placing strong supportive floor around the 61.8% Fibonacci retracement level at 2,366. Remember, it was only back in February that the gold price was below $2,000. Now, we should also not forget international factors. China's economic slowdown and ongoing geopolitical tensions in Europe and the Middle East has undoubtedly contributed to gold's attraction. Institutional investors showed renewed interest, with global gold ETFs experiencing inflows for the second consecutive month in June. However, physical demand in Asia remains sluggish, with customers capitalizing on high prices rather than perhaps making new purchases. There are some strong reasons for negativity short term. The market has likely priced in the anticipated September Fed rate cut, with a 98% probability already reflected in gold's recent rally. This leaves little room for further upside based on rate cut expectations alone. The possibility of a ceasefire in the Middle East looms large, potentially removing a key support for gold prices. And if the PCE data reveals persistent inflation, it may cast doubt on the likelihood of a September rate cut. Such a scenario could swiftly erode gold's recent gains and accelerate a downward move. All that said, if there is a decline, it may only last a few weeks. The summer period perhaps also not helping, as people concentrate more on holidays than investment. The fall in oil prices recently, though, is positive, but as we've repeated ad nauseum, we will only be convinced that 2% inflation will be reached when we see oil at around $70 a barrel or less, rather than the $80 it currently stands at. This is why the Trump narrative of drill, drill, drill appears so attractive. Now, silver shows distinct signs of weakness in terms of price action. Unlike gold, it does not have the benefit of central bank buying, which is why we've said for years and years, ignore all the pundits who kept repeating the narrative that JP Morgan is buying up all of the Western world's silver and so expect $600 an ounce. Nonsense. Hopefully, after us shouting to ignore this over the past 7 years or so, people have at last realized the pumpers are simply full of it, trying to pump up the price of their bags they themselves were holding. Silver appears, though, to have technical support at $28.50. However, if this is breached, do not be surprised to see it fall as low as $26, though that would be our absolute bottom for the remainder of this year. Let's make something very clear, though. We're still bullish, gold and silver, and any fall in price represents a buying opportunity. Admittedly, because silver incurs 20% VAT on purchases in the United Kingdom and similar rates in the rest of Europe, it's the US market in particular that can benefit from purchasing it, while the rest of us focus more on gold. Of course, much depends on your time frame. If you're looking at 10 or 20 years ahead, then 20% VAT will make little difference. Expect silver over the next few weeks to oscillate broadly between $27 and $31. Therefore, our gold forecast is a trading range of $2,350 to $2,450, with 2315 and 2475 as outliers. Silver, we envisage, will trade between $28.25 and $30.25, with an outlier range of $27.50 and $30.50. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there if you haven't already done so. Have a great weekend if you're listening to this on Saturday, and if you're listening to this on Monday. For both of you, that's both listeners, have a most prosperous week ahead.